April 2024. We're going to be taking you on a ride, looking at major currency pairs and currency baskets. And then we're going to be also looking at precious metals. And as it's the beginning of the week, we're going to be looking out for fundamental news releases as we get economic insight as to what's going to happen in the market. And we're also going to take a look at sentiment briefly as we proceed. During the course of the week, we're going to also be analyzing commodities, currencies. We're going to be analyzing indices, especially the US indices. And we're going to be getting various commentaries from various traders here on the floor to give you a clearer and a better interpretation of the Forex market. So right about now, we're going to be starting off with the dollar index. And before we do that, we would want you to just carry out a very little and simple announcement that we also, assignment that we always want you to carry out on our behalf. Now, this market call, as we said earlier, is brought to you by Value Flow Trading and powered by your favorite broker, Opta. But as you know, it's free. So we'd want as many more people to take advantage of it because it's free. To do that, quickly click on the link in the chat box. You can copy the link, and then we want you to paste it on your various social media platforms or various social media groups where you know Forex-related issues are being discussed, whether it's on Telegram, Instagram, Facebook, WhatsApp. Share it on your status, on your stories, so that many more people will be able to take advantage of it as we proceed. So I'm going to give you a very short time to be able to carry out that assignment. We're going to be going 30 seconds. Yeah, 30 seconds is enough to carry out that assignment before we proceed. Okay, so while you're taking on that assignment, we hope you had a wonderful weekend, and we are hoping also for a profitable week as we go into this new week. Today is Monday. We're going to be starting off our analysis with an analysis on the dollar index. But right before we do that, we would also want to check what's going on the fundamental side of things. Once we're able to confirm that the coast is clear or we're going to experience turbulence along the ride this week, we're going to also let you know about that. So quickly, we're going to be looking at our fundamental news calendar so that we know what we're expecting to happen this week. All right, fundamentally speaking, we're expecting PMI from Germany today, and that is going to affect the euro very much. So we're going to be expecting that to play out today. Also, we have the Japanese bank holiday. Although this Japanese bank holiday seems very tricky, I suspect something very fishy went on. There was Japanese bank holidays, but all Japanese pairs sold aggressively. I don't know where the volume is coming on the Japanese yen, but all yen-related currencies sold aggressively. We're seeing about 50 to 80 pips sell-off during the Asian session, although they said they are in the bank holiday. So we're expecting, or we're suspecting rather, that speculators were the ones who made that move. All right, then going forward into the week, we're looking at high-impact news especially. We're expecting GDP to come out from the Canadian dollar. That should be coming up on Tuesday. Abigail is going to explain that to us when she comes on board. Then unemployment cost index for the quarter is going to be coming out for the US. We're going to also be expecting consumer confidence, and then we're going to be seeing employment change, unemployment rates on Tuesday. On Wednesday, we're going to be seeing lots and lots of bank holidays that is going to be coming up on major banks. So you should be looking out for Wednesday. Most banks are observing their Labor Day on Wednesday, May 1st. All right, even in Nigeria, I think it's called Workers' Day here in Nigeria. Outside of Nigeria, it's called Labor Day. So we're going to be seeing speculators coming into the market on Wednesday. All right, and then we're also expecting ADP, ISM services, ISM manufacturing PMI, and the final manufacturing PMI, job opening on Wednesday. Also, on Wednesday, the biggest news for the week, we're expecting the US interest rate release. They've been keeping it flat at 5.5%. We may see a 50 basis points increase. But before then, we're going to also give you a highlight as to what we're expecting to see. By the time we've listened to independent chatter from other big banks and other speculators, so we'll know the direction we're expecting the US funds rate to go. All right, and right after that, we're going to be seeing CPI from the Swiss franc, and then we're going to be seeing unemployment claims on Thursday, and then on Friday, we're expecting NFP to be released. All right, now, one thing you should note while we're going through all this calendar is that on some specific days, there are times to sit out on some specific asset pairs, asset classes. All right, on days like Wednesday evening or New York session on Wednesday, we're going to be sitting out, most likely sitting out on US related pairs. Same thing goes for Friday by 1:30. We're going to be sitting out on US pairs. So we're just giving you a rundown on this calendar so that when you start seeing erratic movement in your favorite pair or your preferred pair, you know why it's doing so. Okay, so we're expecting NFP on Friday, we're expecting interest rates on Wednesday, we're expecting unemployment claims on Thursday, bank holidays on Wednesday also. So there are a lot of fundamental releases that's going to be coming out this week. So we'll implore all of you guys to trade cautiously as we proceed into the week so that you not end up losing up what you made for the whole of last week. Okay? So with that being said, we're going to be going straight into the charts to see what we're expecting for the week and what we're expecting for the day. For the dollar index, we already know that the overall momentum of the dollar index is to the upside. When you look at it from the monthly and the weekly time frame, even the daily time frame is showing us that for the dollar index, momentum is to the upside. However, we saw the dollar index experience some retracement last week. I'm going to show you that on the chart. Previous weeks, we saw the dollar index experience some retracement to the downside. And we're still seeing that happen, okay? We're still seeing that happen even as at today. All right, so let's take a look at it from the daily time frame. Okay, so from the daily time frame, you've seen how that the dollar index has retraced all the way to this level. Based on fundamentals, we're seeing that there was quietness in terms of the news releases. The economic data that came out show that the dollar index was not very, the dollar is not very decisive as to where it's going to. Possibly this week, we're going to get clearer decision on the dollar. All right, but based on technicals, we're expecting the dollar index to trade into this level right here because we have a breaker block, a breaker block to the left-hand side coinciding with the discount level on the last swing to the upside on the dollar index. So I'm expecting the dollar index to trade into either of these levels, either the 50 or the 61.8 level. They all look juicy at the moment. So I'm expecting the dollar index to trade into those levels. And then the last point of interest I have for the dollar index is this IFA at 104.693. All right. So there are more things that I'm expecting to see the dollar index come down to grab before it makes its move to the upside. Okay. When that happens, we'll be clear on the dollar index resuming its uptrend. Possibly with the news releases, prior to the news release, we may see the dollar index trade into this level, and then with the news release, we'll see correction of the trend, which is to the upside. For today, intraday, I'm expecting that the dollar index is going to give us some manipulation. All right, when I say manipulation, the kind of manipulation I'm expecting on the dollar index is a buy to sell. I'm expecting the dollar index to buy before it sells, although it has done that already. Somewhere around 6 a.m. we saw some buying momentum to the upside. I'm still expecting it to buy all the way to this level right here before this sell. It's quite surprising seeing that it's already selling before it got to the level where we're expecting the sell. So this is where we're expecting the dollar index to sell off from, because this huge imbalance, we expect it to get filled. Although it looked like it has filled up to 50% of this imbalance. We can check that out. So let's see from here all the way downwards. We'll see that price just went to 50% of that imbalance before selling off. Okay, price went to 50% of this fair value gap before selling off. We call that consequent encroachment. Okay, now we may see the dollar index now selling to the downside, seeing that it has filled 50% of this inefficiency that it created around here. So with this, we're expecting the dollar index to now trade further into the downside all the way to this level right here. Okay, this is what we're expecting on the dollar index for today. All right, so if you're trading any dollar related pair except USD for obvious reasons, you know that USD is experiencing, will I say, I wanted to say trauma, but it's not a human being with emotion. So USD is in between intercountry place, all right, intercountry fundamental place. So we'll be seeing erratic movements a lot on USD. So I advise you to just stay out until things are clear. Maybe probably next week, you should be expecting USD to resume normal price behavior, all right? So for you, other dollar related pairs, USD CHF, USD CAD, and the likes, we're expecting sell off of them because we're expecting the dollar to sell all the way to this downside. Okay, so that's all for USD index, USD dollar index. Let's move over to Euro USD. Let's look at what we have for Euro USD. Looking at the daily time frame, we're seeing that Euro USD has traded into this mitigation block right here. Okay, seeing that Euro USD has traded into this mitigation block right here, we're expecting a sell-off of Euro USD to the downside. Okay, there's just one more thing that I would like to add to this daily time frame analysis on Euro USD. You can see that when we swing this level all the way to the downside, Euro USD also traded into 50% level, and 50% level is a good place to short from because it's what we term as equilibrium between premium and discount array. Okay, so 50% level coincides with the mitigation block to the left hand side. So for me, I think Euro USD looks ripe for a sell. All right, and then let's look at it on the 4-hour time frame. On the 4-hour time frame, we can also see that there was a little slight consolidation around here. Euro USD broke out of it, traded back into it, and then price is currently looking ripe for the sell-off to the downside. While we are looking for a sell-off to the downside, you can also see that when price was making its move to the upside, it created some liquidity, all right? So you can see those liquidity points. You can see those liquidity points already aligning, all right? We call it diagonal liquidity, all right? So we're seeing that Euro USD has created all this diagonal liquidity. Now, as we all know, price creates liquidity to come back to grab it, right? So we are expecting Euro USD to trade all the way to the downside right here. You can see even horizontal liquidity residing right below the diagonal liquidity levels, okay? So we're expecting Euro USD to trade to this side. Okay, so this is where we're expecting Euro USD trades to get to. So if I see my entry signatures, I'm going to be selling Euro USD from this top where it currently is. Once I see my entry signature, I'll be selling it all the way to this downside. Obviously, I'm going to be giving you updates on that. And for those who are on our TDA Plus group, definitely, you know, I'm going to share that with you without any hesitation. All right, so if you're wondering what TDA Plus group or Market Color Plus group is, we're going to give you a short explainer after my session. All right, so for Euro USD, this is what I'm expecting. Now over to the 1-hour time frame, we can see a slight break of structure on the 1-hour time frame, although price didn't close below it. And then alongside this short break of structure, we're seeing price didn't close below it, but then price couldn't close above this other guy right here. So you're seeing that price is stopped between this swing high and this swing low, right? So this is the swing low where price is stopped, and then this is the swing high where the range has been created. So we're expecting price to bust out of this range going forward into today. I'm expecting price to bust out of this range to the downside. Okay, so seeing that playing out on the 1-hour time frame is going to bring great joy to me and to everyone who's trading with us based on our analysis. All right, so that is that for the Euro USD. If you see your entry signatures on Euro USD, be willing to take that short to the downside. So for me this week, short Euro USD. You can record that. Possibly by the time we're ending the week, we're going to give you a recap on all the trades we've analyzed for this week. Okay, so after Euro USD, we're looking at GBP USD, kind of a brother to Euro USD. Sometimes they quarrel just like siblings do. For GBP USD, I'm seeing that price is willing to trade to the downside continuously. We can also fib our daily time frame. Okay. All right, fibbing our daily time frame, seeing that price also traded to this mitigation block right here. You can see the mitigation block. Let me draw that clearly. This is the mitigation block, similar to what Euro USD did. All right, so seeing that price traded into this mitigation block, we can also see that there is also another block that is residing right here. Price has traded into it. Okay, these two confluences alongside the premium discount array, you're seeing that price is currently at 50 and 61.8 level. It's hovering around that level. I'm expecting GBP USD any moment from now to give me sell confirmations to the downside, because we all know, looking at it from the weekly time frame, we know that GBP USD is bearish. Okay, it's clearly bearish. We've seen break of structure. Even on the weekly time frame, you can see that price broke this structure right here. Look at it here. Let me draw a horizontal line across it. Now you can see that orange line, price broke it to the downside. And after breaking it to the downside, price has returned to this weekly breaker, weekly breaker block. We're expecting price to continue selling to the downside. For the most part of this year, until somewhere around August, I expect GBP USD to trade into this level. Somewhere around June, July, August, Q3, I expect GBP USD to trade into 1.2 levels. Okay, that is my expectation for the first half of the year on GBP USD. We're going to also be looking at fundamental insights that is going to push GBP USD to this side, one of which is the US interest rate. We're expecting some movements on that, and then we're also seeing GDP on the US, we're seeing CPI on the US, all is showing that inflation is going to the downside and the economy is growing. We're going to also be looking at what's going to happen on indices when we analyze that as a basket or a collective analysis. We're going to be able to use that to interpret what's happening on the dollar versus what's happening on other foreign currencies like GBP USD. Now for the weekly time frame, we're seeing that GBP USD is clearly to the downside. Daily time frame, that's retraced to a good level where it should sell. And then for the 4-hour time frame, we're also seeing that play out. We're seeing that GBP USD for this morning, it has cleared the high of last week. That is one very interesting factor you should add to your analysis. Looking at Euro USD has not cleared the high of last week. Looking at the dollar index has not cleared the low of last week. You can see that this is the low of last week. The dollar index has not cleared it yet, but we're seeing GBP USD take out the high of last week. Euro USD hasn't taken out the high of last week. This is giving me a sign that this move to the upside on GBP USD is actually a fake out. Okay, we're going to, if you want to learn more on that, you can sign up to our FX Bootcamp course. More details about that coming up shortly. But for GBP USD, I think this is a manipulation. This buy move to the upside is a manipulation on GBP USD. I expect price to correct to the downside. To see where we are expecting that correction to play out, I'm expecting to see price break this low on GBP USD. Once price breaks this low, I'll be right on my analysis. By the way, the goal is not to be right, the goal is to make money, right? So I'm expecting GBP USD to break this low. When it gives a retest, I'll be willing to go short on GBP USD all the way to 1.23 levels for this week. Okay, that is my expectation on GBP USD. Seeing that GBP USD has formed the high of this week while breaking the high of last week, we're expecting it to go and form the low of the week below 1.23 levels. Okay, so when GBP USD breaks 1.24490, when it breaks 1.24490, I'll be going short on GBP USD. So whatever entry signatures that you use, when you see price break below here, you should be willing to activate that sell to the downside. Okay, so that will be all for this first section. I also promised you that I was going to explain what the TDA plus means, especially for those who are just coming into this group for the first time or are still totally new to the whole concept. Now, what the TDA plus group means is it's a free group where we share all our trade markups, our trade signals, our entry, exits, even how we manage our trades based on risk to reward and break even when we are floating profits or when we are trailing our stop. All right, trade management and every other thing is shared on that group for all the trades. So when traders do the analysis here on the market color, we go back to the TDA plus group to share our signals as to where we're entering and where we're exiting the market. To be able to be a part of that group is totally free, but you need to just carry out 3 exercises. The first step of the exercise is to sign up with our preferred broker using the link that's going to be provided in the chat box soon. All right, after you sign up with that link, you fund your account with about $500 all the way to $20,000. If you're not able to fund up to $500, you can chat us up so that we can see maybe if you have 450 or 400, we can see what we can do for you. When you sign up, fund your account, you send us a screenshot that you funded your account. After that, we're going to add you up to the group so that you can trade alongside us and also withdraw alongside us. Okay. We're going to now go on a very short break for about 1 minute. And when we return, we're going to be analyzing gold against the dollar as a reference to precious metals. And after we analyze that, we're going to be looking at the yen. Yes, the yen has been a little crazy for the past few weeks, but when we analyze it, I assure you, you're going to get clearer insights as to where the yen is going to be going to, especially if that is your preferred currency, okay, for trading. And after we do that, we're going to be taking questions and we're going to be taking commentaries, and then we're going to wrap up our market color for today. All right, so sit tight. You can unbuckle your seatbelt for the short while. And when we return, we're going to continue with the analysis, okay? So until then,
good morning, traders. Welcome back to the market color for the 29th of April, 2024. And as you all know, this is the session for the precious metal gold, to be specific. So right about now, we are going to look at what are we seeing on gold, particularly on the higher time frame. From the weekly time frame, we can see clearly that the precious metal is very bullish all the way to the upside. However, we go to the lower time frame, you begin to see some market structure shift, which is giving us some pre-information of what we're expecting to see on the precious metal. Now, on the daily time frame, if you look at the daily time frame, well, last week, particularly on Friday, we said that we're expecting the precious metal to rally into the 50% of this liquidity void that was created here, this massive sell to the downside. So we expect this rally into 50% of it before it starts selling all the way to the downside. And that is exactly what happened on price last week, Friday. Now, going forward today, what are we seeing on the precious metal from CJ's analysis? And that is what we are looking at, particularly on the dollar index. You know, when the dollar index is rallying, that is also giving us some pre-information on what we should see on the precious metal. Particularly if we begin to see the rally on dollar index, then we should see the precious metal tank, except from some little, circumstances where the both of them will be rallying at the same time or tanking at the same time. And when that is happening, there's a name we call it. For you to get that, just join our FS bootcamp. Then we'll give you what is really happening when you begin to see that and what you should do when you begin to see that. All right. Now, on the daily time frame, we've seen clearly that we've seen market, clear this particular low. Oh, so sorry about that. So sorry about that. I believe you all can see my screen now. All right. Now, if you see on the daily time frame for the precious metal, you can see clearly that at this particular point here, we have the low at this particular spot, which you can see here, that price actually cleared last week, Friday, this particular low here. We've been expecting price to come to that place and either bounce back, or if it breaks it and close below it, then that is going to give us a very clear confirmation. And after the pull back into the 50% fib level of this liquidity void, we expect price to begin to sell all the way to the downside here. Now, if you look at it on the 4-hour time frame, what are we seeing on the 4-hour time frame? We can see clearly for the 4-hour time frame that gold actually, cleared this level we've been waiting for to the downside. You can see some close of candlestick below that level. However, after this pullback, we expect it to still tank all the way to the downside. Particularly, what we are seeing on the daily time frame after the long rally, it should short a bit to the downside. And where are we expecting it to short into? At least it should short into the 50% fib level of the last major swing to the upside. So we are expecting to short all the way into somewhere around this level here, where we have a flip zone and also the fair value gap there. So we're expecting gold to short all the way to around the 22,000 level. If that, particularly this week, that we are expecting FOMC and also NFP. It's going to be a major week in trading. Like this week is going to be a very, very funny one. Now, on the 1-hour time frame, what are we seeing on the 1-hour time frame? For us who are day trader, we just want to take the major trade of the day and leave. Now, on 1-hour time frame, if you notice very well, we've not seen clearly our bull structure, particularly for the sell. Instead, we are seeing more of the buy. I know someone will be like, yes, I can see the sell. Yes, it's there, but it's not that clear. And remember, if it is not obvious, it is dubious. Now, where is it for the buy? You can see the buy somewhere around this place. This is it. So this is a shoulder here. You can see this sweep and the possible break to the upside. So I am expecting that when price come all the way into this zone here, when price come into the zone here, then we should see some level of pullback, like reaction all the way to the upside before the sell continues. Now to the other sales zone too, what are we going to see on the sell zone? All right, now if you look at current move right now, it has not really given a clear move for a sell, so you shouldn't do anything as regard that. Instead, go to your lower time frame to see, do you have any structure that is supporting your bias? Now, looking at what we have now, there's not really much structure supporting that bias. But look at this move here. This is a clean buy structure, and you see when price came all the way into the shoulder here, it's bought and moved all the way to the upside. So those are the kind of thing you should look out for to take, not that you are just going to just jump into the market. If your setup did not show up, just allow it to run there. All right. Now, let's quickly look at the Japanese yen, the yen basket. Last week, the yen basket, slide deeply into the deep. And that is very, very weird for it, all the way to the downside. We've been expecting the yen basket even to rally a bit all the way to the upside, but his own price discovery is into the deep, but that is giving a different vibe in the market. Now, if you are on our market color yesterday, the mail sent yesterday, our analysis is that we are expecting it to tank a bit more into the 5,800 level, which it did, and even tank a little bit further, then resume its bullish move to the upside, like a pullback to the upside. And that is what we are seeing on the yen basket currently now. If you look at it on the 1-hour time frame, you are going to see a lot of manipulations on the yen basket, particularly yen correlated pairs this week, because all that is happening, like UJ, if you see UJ now has been giving some level of misbehaving move a few days ago. And right now, the yen itself, you just see a kind of spike on the chart. Even you yourself, you won't know what causes that. So instead of allowing the market to trap you that way, I would advise if you can just take a look away and pick some other pairs, or if you have enough, capital to afford a wide SL. When I mean wide SL, I don't mean a 100 pips kind of SL. What I'm trying to say is if you can afford like maybe 50 pips, 30. But if you are the type that you use 15 pips SL, 20 pips SL in trading the yen correlated pairs these days, you truly would smoke your account off because the price action has been so funny. You get the point now. Now, if you look at the 1 hour time frame, we've seen yen rally all the way to the upside, and the yen correlated pair that we will be checking out this morning is the GJ. Now, if you look at GJ currently, if you let's see it on the monthly time frame, like we explained sometimes last week, that we expect price to come and clear liquidity at this particular high. We've seen that happen. You see it, that is what really happened. Price has cleared liquidity at that high, and there is this particular flip zone here. I truly wish our markup would keep, staying all through on the chart for us, but sometimes you just see it disappear. All right, so this is what we see on the yen basket. You see this flip zone, that's after price cleared liquidity, it tapped into that flip zone, and that is where it will begin to, we expect it to come down from. Now, if that is going to happen, then we are expecting the yen basket, like we analyzed in the weekend. During the weekend, we see our analysis is that we expect it to rally a bit, even after all those sell-off, then it should pull back a bit to the upside before it's resume its downtrend again if it's still going to go down. However, if you look at GJ on the 1 hour time frame, you're going to see that the market structure there is so funny. Yes, someone is going to call this a shoulder. Yes, that's a real shoulder, but you see the way price broke it forcefully to the downside. Now, if you want to trade it, like I said, you can't use, right these days, you can't use an SL of maybe 15 pips or 20 pips to trade anything JPY, because the spike, when it catches you, it won't be so funny. All right, now this is a shoulder here for the yen, the GJ. Now, if this is going to be our shoulder and we've seen price broke it forcefully to the downside, then we are expecting that when price comes back into the zone, you can easily sell all the way to the downside. And if you look at it on the 15-minute time frame, let's look at that particular zone on the 15-minute time frame again. On the 15-minute time frame, you refine it more into that level. This is it. This is a flip zone here, and also a shoulder that we've seen price cleared out forcefully to the downside. This is something like this all the way. Now, since we've seen price move all the way to this downside now, broken this shoulder to the downside, then we expect price to rally all the way to this zone before it starts coming down. Now, let's measure that. If you are going to see how many pips would that be if price is going to come all the way into that level. Now, if you are going to sell all the way from that level, then you are going to be having SL of about, imagine, 250 pips, 250 to 260 pips. Now, would you love to take that? Now, no matter how small you refine it, even if you go to your 5-minute time frame, you are still going to see the same thing. There is nothing much there. That shoulder remains that same level, just that you should have enough stop loss to trade. That is why I'm advising that if your major peers are the yen correlated peers, it's better you look at some USD correlated pairs, dollar correlated pairs instead right now, because what we are seeing on the yen baskets now, you may not know where the direction of the market is heading to. All right, so that is going to be that for the Japanese yen pairs and also the precious metals. If there's any question, please type in the chat box before we call it a day. If there's any question, please let us know in the chat box. Good morning, sir. Good morning, sir.
Can you hear me? Network seems to be bad. Can you hear me?
Yes. Loud and clear.
All right. Good morning, everyone. Great analysis. And yes, that caveat is very important with regard to yen pairs. I was in transit since Thursday, so I haven't really had the chance to look at the markets. That's why I've not been coming for the market color sessions. But I didn't really look at markets Thursday and Friday. But when I got back to the markets and I got back home, my base, I saw the move on yen. CHF like I said, has been an indicator for what we expect the yen pairs to do, but it seems like people are not interested. They just want to keep selling the yen. So that caveat that you should stay away until it stabilizes makes a lot of sense. I'm also waiting to see what inflation, yen bond inflation, for those of you who use our value flow models, yen bond inflation, I want to see what that will tell me about the yen. And this is why sometimes it's good to have automated trading software, to have bots that you can plug in when the market is unpredictable. In all honesty, it's been a tough trading environment, in all honesty, at least for me. I don't know for others, but tough in the sense that from a sentiment perspective, sentiment is not fully clear on what the dollar wants to do. But long term, let's look at a few things. Let's see CHF-JPY. Let's see CHF-JPY. Now, the reason I'm saying we should look at CHF-JPY and also look at CHF-JPY on this smaller time frame. I'm still looking at CHF-JPY as a possible indicator. All right, so CHF-JPY, we have a very clear shoulder pattern there. What are the things we're identifying? And again, guys, the reason why I'm choosing CHF-JPY out of every one of them, because we are told to stay away, out of every one of them, is because the interest rate on CHF and JPY is very clear. It's very clear. That's why I'm choosing CHF-JPY, because the fundamental narrative is still there. Japan is increasing rates. Swiss National Bank is reducing rates. So from a technical perspective, I've told you the fundamentals is interest rate divergence, where two central banks are doing the opposite thing. And the sentiment, already explained that. And then, of course, let's look at structure and liquidity. So what am I looking at? Exactly, that's our shoulder there. They are all pretty much looking alike. But the reason why I'm choosing CHF-JPY is the PIP distance for stop loss is a bit more realistic on CHF-JPY than on some of the other pairs like GBP-JPY. So CHF-JPY, exactly, that's our shoulder. After identifying shoulder, what do we identify? The sweep. Where is our sweep? That's our sweep. Those of you who say you don't really know box pattern, I'm stating it now. Mr. Femi will come to answer. Is there any day or the week the highs and lows are expected to form for the pairs? Okay, let me interrupt my analysis to answer Mr. Femi. Yes, people generally expect reversals from weekly highs or lows on Tuesday or Wednesday. Tuesday or Wednesday, they expect the high or the low to form on Tuesday or Wednesday. Sometimes it extends into Thursday, but typically Tuesday or Wednesday. All right, so I hope I've answered your question. And then it's also after the third push count. So when you put your charts on the 4-hour, you see a sharp move 1, another sharp move 2, and a sharp move 3. So after the third one, all right? Are there specific fundamental news releases that determine weekly high and lows formation? No, but there are specific fundamental news that inject a lot of liquidity into the market. So before that news, the market will not be moving at all. After that news comes out, then the market will start moving. And we know those news that have to do with interest rates, news that have to do with inflation, and then lastly for the dollar non-farm payroll. News that has to do with interest rates or monetary policy decision, news that has to do with inflation, which is PMI or CPI, and then news that has to do with employment, primarily non-farm payroll, first Friday. Those three news. Every other news is not guaranteed that it will be high volatility. I hope I've answered you, Mr. Femi. Let's go back to our charts later. So that's our shoulder there. So first thing is shoulder. Identify the shoulder you want to start from. Next thing is look for a sweep of that shoulder, a grab of liquidity above that. How do you know it's a grab of liquidity? There will be a sharp move to the upside. That's the sharp move Lekon just showed us. Then there will be a sharp move back to the downside, forming a fair value gap. That's the move there. And that move should form a fair value gap. That move should break structure or have a market structure shift. And that move should also be very violent relative to the other size, to the size of other candles. So do we see that there? Yes. We have a break of structure. We have a fair value gap formed. We have a market structure shift plus a change of character. All right. So what is the next thing we look out for? We look out for the fair value gap that is formed. The fair value gap that is formed. And we want that fair value gap to also coincide around a flip zone. We want that fair value gap to also coincide around a flip zone. What is a flip zone? A previous support that became resistance or a previous resistance that became support. That's our flip zone there. That's a support that was broken and became resistance. There's also another support below that, that week, that rejection week is also another, exactly. So that's a clear flip zone. What else do we look for? We want to see some sort of diagonal liquidity that will serve as an inducement, diagonal liquidity. So now if we're expecting a pullback, I know that diagonal liquidity has already been swept, Lekon. So we are looking for diagonal resistance now, since we're expecting price to buy. So we're looking for diagonal resistance. So where's the diagonal? Draw it for us. Let's see. A diagonal resistance that is tapping into that fair value gap or close to it. You can zoom in, Lekon, so that they will see it more clearly. Exactly. So that's the diagonal resistance there. Diagonal order flow. There's liquidity there. Then there's also horizontal resistance there too. Equal highs. Those equal highs. Mark the equal highs for us. Some people call it base. Now take it high. Exactly. Let it touch that inverted fair value gap. After that, just after the FVG. Let the two of them touch. Bring it down. Not the wick, the close. Move it to the left. Let it touch it so they will see the equal highs. Exactly. So now it's very clear. It's quite clear. You can bring it down a bit. You can bring it down a bit to touch the twin tower resistance or the base or the variation, depending on what you call it. All right. Reduce that diagonal liquidity. The trend line is too long. Just let it touch the 3 points. That's fine. Reduce the size, please. Reduce the size. Exactly. Exactly. So this is a typical box pattern. Typical box pattern. Typical box pattern. So that fair value gap, will look for 50% of it, encroachment. Now there's another fair value gap above it. That's also very tricky. It's even an IOFED. So let's do 50% of that one, of the IOFED, 50% Fibonacci level of the IOFED. An IOFED is one that has a sharp move to the upside and a sharp move to the downside. Exactly 50% of that, because price can go there. Price can go there. So you may want to take a screenshot of this and see where price is going. 50%. 50%, exactly. Then you can delete the Fibonacci. All right, so zoom out and screen grab this. This is a potential setup. This is a potential setup on CHF-JPY. So the stops for this one are not as high, as the stops for the other one. So where that inverted fair value gap is, where our diagonal resistance is, that's where we're looking to enter. That's where we're looking to enter. Now let's go to 15 minutes. Oh, we're already on 15 minutes. There's nothing again to go to. So when price taps, show how price should move, the possible scenarios we're looking at. Into that fair value gap to come down, or it can go all the way into the 50% encroachment, consequent encroachment of the. So there's that. So, exactly, can go all the way there and come back down. Then the safest one is if it goes all the way to that consequent encroachment, or it goes to that 50%, or it goes all the way into that one, there is still a box pattern in this diagonal resistance, that slanting line. There's a box pattern there. See the shoulder? That's the shoulder there. See the sweep? That's the sweep there. See the break of structure to the downside with a fair value gap. So what you can do is wait for the outside ones to play out, right? Grab all that liquidity, then come back into this smaller box pattern, right? And then watch what price will do, and then trade that. All right. So this is what I'm still looking at for CHF JPY. I really believe that yen wants to start buying. I really believe that this is just a serious stop hunt to frustrate everybody. So I'm paying attention to my bond pairs and to my yen basket pairs. All right. And when that opportunity comes, it will be very nice, but let's let everything to calm down first so that those ranges can shrink. And whilst we're letting it calm down, you can be paying attention to your dollar pairs, see what you can get from there. All right. So, Lekon, over to you. There's not much else to say. Over to you. Yeah.
Thank you very much, sir. All right, everyone, this is going to be the end of today's top-down analysis, and know very well that our other courses are still very much available. ATM cash flow, for example, if you are the one who trades the yen pairs and you are not comfortable with the move going on the pairs right now, you can easily switch to synthetic and get the best out of it. Our training is just going for 100,000 naira. Just reach out to us on our WhatsApp line. You are going to see it in the chat box. Then we are going to follow you up and give you the best that you want for the synthetic class. And we have our bots too there. They are doing very much well. They are doing very much well. It can be a bit slow, but it's steady. All right. So reach out to us. We have the Truth PA, Dr. Bills there. And also we have our HFT passing too. You don't need to blow that PropFirm account before you pass it. We can easily help you pass your PropFirm account. All you just need to do is just send us a DM or WhatsApp, then we get you on board that way. All right, so this is going to be the end of today's top-down analysis. Make sure you join us for the New York session of the market call-up by 3 p.m. this afternoon. Looking forward to see you on board again. Trade cautiously and use your proper risk management strategy. Cheers and God bless.